Hi, my name is Vieira. I'm a professional trader, and today I'm going to make a demo of the live channel, the web conference tool I use to communicate with the customers. I'm going to use BlackBerry earnings, since today we have a pre-market this earnings announcement. BlackBerry, that pre-market is down basically 20%. 20% overnight, great short, and once again congratulations to all those that played BlackBerry short according to my instructions. Since in January 2013 I recommended to close long positions. My upside was limited to $18 an half, reversing to the short side. And in the past few months, as well as in the past few years, every single call that I made in this stock, BlackBerry, has given to every single one millions of dollars in profits. Short term, mid term, and long term. Obviously, betting on the collapse in Research in Motion, former Research in Motion, 125 to 145, all the way down to $9, and only then buying BlackBerry at $6.30 with a very specific price target or upside achievable in January 2013, when the stock traded to $18 and immediately downgrading the stock, reversing a very heavy position sizing to the downside. On the chart, you are looking at this small ellipse, and this small ellipse represents the target region I was looking for in BlackBerry. So a great short since the recent recommendation to re-enter the short side above $16, and to be precise $16.30. And you find in the website and on YouTube more than 100 case studies for more than 60 stocks and ETFs, where Research in Motion, and now this company is called BlackBerry, it is included, including live trade calls. And this is just one more, so congratulations. Obviously I had to address this case today, BlackBerry, since it is an important one. It is a speculative play that I've been here discussing for several years. Having said this, as you can see, I'm sharing my screen with you, and you are looking at one of the most important tools, if not the most important. For me it is obviously the most important, the tape. I'm an expert reading the tape. So I share my information with customers, with individuals, institutions, and basically I inform them what my opinion is about all these stocks that I include in the service, more than 60 stocks across different market sectors. I'm using 4G connection, therefore this tool works quite well. As you can see, it is working live on 4G. It is a lovely day, it is sunny. I believe that is rather important to have a lovely day, nice morning, pre-market, while assisting to one more crash in BlackBerry. Having said this, I'm going to address some other recent calls I made. Obviously, one of the most important, the crash in Apple. And also I'm going to show you, I'm going to pull this I use very simple tools. let's see if this is the chart that I'm looking for to show you. It is precisely this one, and I'm going to also show you the today quote pre-market 394.80. We addressed Apple here, one of the most important, if not the most important company in the world, although I don't like that adjective. Obviously participating in the bull market in Apple, 238 all the way down to the region 677 to 701. And you have a live trade call, a case study, one famous calling the collapse in Apple, and obviously offering to investors in the past few years hundreds of millions of dollars in profits, obviously to all those that wanted to participate and to listen to my guidelines, and then informing them about my vision, calling the collapse, the total collapse, the crash in Apple, and I believe that it is a fact. I'm the only person in the world explaining and calling the collapse with also a very specific price target. More important, I would say, that calling the collapse is that every single subscriber in the service during the past few years trading this stock and listening to my opinion had the opportunity to follow the guidelines where every single day, week and month I share my opinion and informing them about what is the likely high of the day and low of the day, and also clear instructions how to trade these stocks, Apple obviously, and more than 60 stocks on the exchange. And I'm referring to the most important in the world, the Nasdaq and the New York Stock Exchange, as well as the Japanese market, European markets, Russia, and so on. Recently, and there is also a live case study, including live trade calls, calling the recent bottom in Apple 386.5, where short positions were closed, reversing to the long side. Obviously this was done within a specific range, and then you saw a very important bounce or a rally in Apple to $460. And recently I recommended to take profits in Apple, closing the long positions at $453, 100% accuracy, therefore defining all these pivots in the past few months, but not only in the past few months, as well as in the past few years, all the bottoms, all the inflection points, and creating this chart in Apple that obviously gave us a great competitive advantage. So I don't use in the service any particular indicators, I use very simple indicators, but those indicators are just mere tools and nothing else. I don't rely on fundamental analysis or technical analysis or any sort of formula or complex indicators to provide or to offer information to customers. I rely solely on my analysis, that is based on, in first place, what I see on the tape, and then well, I believe that I learned to use quite well the brain. Let's see if I believe that meanwhile the camera was paused, and we are going to, I apologize, this is working on 4G. Also, I believe it is important for you to realize how simple it is. You can log in from any mobile device, including desktop, obviously. And this is just one of the tools I use to communicate information with customers, as I said before. So here we have Apple, and yesterday also announced that I closed or recommended to close entirely the short position, the recent one, at 394.5, where also I uploaded a presentation speaking about the truth about the great investors in the world and the US stock market, which is available online also on YouTube channel. Having said this, also announced that we are going to look at some recent charts. Obviously, this bet on Apple was extremely important, betting on the crash, but you find information online, case studies across all the stocks that you are looking at. F5 Networks, Facebook, all these, Green Mountain Coffee, Goldman Sachs, Google, Groupon, and so on. By the way, congratulations to every single investor in Groupon, since we called the crash in Groupon, and then and only then, after calling the crash and making the most on the short side in Groupon, upgrading the stock last year in November 2012 within $2.79 to $3. Calling the potential for the stock to get to $8.5 to $9 in 2013 or in the future. That was the call made in November 2012, and the stock yesterday was trading at $8.5. I'm going to show you the chart that I shared. This is just one more example of a chart that I shared with subscribers. And I'm doing this also to explain one of the principles followed here for years. It has been, let's see if this is going to load the chart. On the background you have very nice background. I'm very informal, sunglasses always, t-shirt and shorts and sports shorts, and this is the way I am. And unlike the great investors in the world, in the US, Jim Cramer's, David Highhorn and Paulson's and Jim Rogers and all those individuals, I'm not on TV, on CNN or Fox News. In fact, I prefer to be seen as the worst trader in the world or the worst investor in the world. So in November 2012, this after recommending to close, obviously, the swing short positions, betting on the crash in Groupon, I upgraded the stock to buy, strong buy. That was followed by many peaks discussed here in the service. Great example is Netflix, one of the best performers, if not the best performer in 2013 in the market, upgraded to strong buy at 50 to 86. So betting on the crash in Netflix as well, all the way down to 50 to 86, a price that I announced before the price was actually seen on the exchange, and only then recommending to close entirely short positions and reversing to the long side when everyone on Wall Street was downgrading, in fact, Netflix. And Netflix, as you all know, rallied significantly to $240 in 2013. Obviously, in the service, I provide information about hedging strategies, earnings. Hedging strategies, I'm going to give an example. That was the case, the recommendation, short Apple, strong sell rating since the range 677 to 705. My upside on stock was 708, and that was in fact announced in the blog 1 year before, basically. So everyone knew that the upside, my upside in Apple, was limited to 708, and so far the high on the stock was precisely 705, very near that upside. In Groupon, that was one of the recommendations. Obviously, you understand the principle followed here, to bet always on the crash, and then after eliminating the risk, reversing positions to the long side. That was the case in Netflix, that was the case in Pandora Media, other case study, betting on the crash with 100% accuracy all the way down to $7.30, and only then investing in Pandora Media, that meanwhile Wall Street now has been upgrading to $22, and the stock is trading basically at $18 and something. So congratulations to all those that play at the Groupon, that believe that Groupon could get to $8.50 and $9, and then you can take profits if you wish. I do believe that this may very well be long-term bottom, these $2.79 to $3, and one obviously should invest in companies when there is climax selling, and when obviously everyone is downgrading the stock. That was the case, always betting on the crash, and then after making the most, betting on the crash, eliminating the risk, I repeat, investing then in Groupon. That was a speculative play, but one of the best performers in 2000. Plus, they followed the great investors of our time advice. So instead of betting on Apple collapse, or they never thought or considered that Groupon or Netflix could be by far better performers comparing to Apple. So if you maintain it, and I'm going to show you again that chart in Apple, if you maintain a long position in Apple, as the great investors in the world have been recommending, including Wall Street analysts, with targets to $1,111. Obviously, you lost all your money, but these individuals like Jim Cramer in the US, David Highhorns and John Paulsons and Jim Rogers and so on, are individuals that they are on TV. They even probably are paid, or if they are not paid, doesn't matter. What matters is that they are there informing investors to, and this is just one example, in fact, the case in Apple, to buy the most during a crash. And also it happens the same with retail newsletters in the US, the Motley Fool, Zacks Investment Research, and so on and so on. I could give many cases of websites, famous websites in the US, precisely where the herd is there, believing that they are going to invest in something that is going to give them a huge return, while in fact you have to do precisely the opposite. And also, obviously, I'm referring to seekingalpha.com, where you find articles suggesting to buy these companies like Apple above $550, companies like OCZ Technology at $7 before a total collapse down to $1, and things like this. I think that one investor has always to consider or should have a contrarian view. I think that is critical, and I like to give the example of the great investors in the world, those that are on the news, those that are on the Forbes, those that are on the magazines, those that they write books and they make a living precisely writing books. Those individuals, I believe that they have not proven anything and they have no track record whatsoever. A great example is the case with David Hayward, a very famous, it appears, I even don't know how to pronounce his name, but it appears that he is a very famous fund manager in the US who also bet on the collapse in Green Mountain Coffee, a stock that is one of the best performers in 2013. And Green Mountain Coffee, you can, and there is a case study with a live trade call calling the bottom in Green Mountain Coffee at precisely $17.80. Green Mountain Coffee, the ticker is this one. I'm just giving you obviously some examples, and the bottom occurred there in 2012, and you see that the stock rallied significantly while this individual bet or remained bearish Green Mountain Coffee instead of, and this obviously violating the most basic principles or rules of trading and investing. Obviously this Green Mountain Coffee, it was, in my personal opinion, a bubble. We bet on Green Mountain Coffee crash all the way down to $17.80, but then Green Mountain Coffee was upgraded to buy. And obviously a great part of this move is a short squeeze, as you might understand, precisely due to these individuals that they remained bearish these stocks. The same situation with Netflix. Partial move in Netflix is obviously a great short squeeze because 99% of Wall Street was bearish the stock. They never considered that Netflix could go again up above $200. Having said this, I would like also to show you, since I started with the BlackBerry, I discuss in the service ETFs. I believe that is rather important to discuss ETFs and to explain the correlation that exists between ETFs and stocks. So I'm going to give you an example of ETF we discuss here. This one, the financials where I bet or call it the crash in 2010. This red circle represents precisely the most position sizing on the crash. Then you had the bottom in 2011 and the strong buy in 2012 since then. And I left the long side in the financials, or the ETF better saying, in 2013 precisely at 72.5. And there is a live call precisely calling here to take profits in the financials at 72.5, since I consider that the great return on long side in financials was to buy the financials in 2012 in April, and then to sell in recently in June 2013. So all these calls that I make, they are recorded live. There are instructions, specific instructions, and I'm showing you also ETF, and obviously recommending to buy several companies with a very specific target upsides, such as JP Morgan, upside potential $56, companies like Citigroup, companies like Morgan Stanley, well, several companies, American Express and so on, that recently we also recommend to take profits on the long side. So these are just some examples where, for example, one of the great investors in the world, Jim Rogers, that is everywhere, he published books and is well known in Singapore, in the United States, has been calling to sell short financials and while buying gold. So you all know that gold collapsed, and that is other terrific example. You can search on the internet, while great investors in the world, Jean Paulson and David Highorn, again appears the same individual here, betting on gold. And there is in fact a presentation. You can go to a website called Business Insider, and there they have a great presentation with bullish targets in gold that goes from $2,000 an ounce up to, and what the number I'm going to tell you is correct. It is there on the website. You can look for it. 46,000 in gold. So our bet in gold was precisely the opposite. We bet on the crash in gold, and we bet on the crash in gold using again the ETFs. There is an ETF for gold, but there are also stocks for gold. So I'm going to address here one that I actively discuss in the service, and I'm referring to Freeport McMoran Copper and Gold, and I'm going to share to show you sorry again, the connection, it appears that went down, but we are going to recover this. And again here I don't use scripts. I don't have time obviously to write scripts. And this is the code. Let's see if there is pre-market code in Freeport McMoran. The ticker is FCX. So let's see here if I can show you Freeport McMoran Copper and Gold, and this is represent the trading in the past few years in Freeport McMoran Copper and Gold, calling an investment in Freeport McMoran in March 2009, when I called the bottom in the market, recommending to close entirely short positions. This was a buy. At that time, the split prices, that is the price split prices, the range was 35 to 29, and a strong buy obviously, and then giving a strong sell rating in January 2011 precisely at the top, and this is also recorded at testimonials, reviews about all these that I'm talking about, recommended to close Freeport McMoran, and we are talking about the press split prices, the range 118 to 122 or so, reversing to the short side, and since then long-term downtrend in Freeport McMoran, betting on the collapse. And this is one of the stocks where one obviously had to close long positions, then reversing to the short side, betting on collapse, as well as in gold. And other example is Newmont Mining, a stock that everyone was calling to $100 plus. And I'm going to show you also the chart in Newmont Mining. And again, I repeat that every single call, short-term, mid-term, long-term, is recorded and is available in the trading history for everyone to see, including video instructions. And here you have the long-term chart in Newmont Mining, a stock that everyone was calling to $100 plus, a strong sell rating given between 55 to, in fact, above $55. So a region 55 to the top 65, betting on the collapse, reiterated in 2012, precisely the top in 2012. It was where I started to be bearish about Newmont Mining, and then you have the total meltdown in Newmont Mining against everyone else. So this great principle of always making the most on the short side, betting on the collapse, and only then investing in the stocks and in the market. So that was also the principle when there was the collapse in the market in March 2009. Having said this, I would also like to, you see a list of stocks where I address obviously earnings. I share my opinion with individuals, uploading video instructions. This live channel, this is one of the tools where I discuss, I give comments. One of the most important stocks in 2013 that no one believed in, Tesla Motors. I cannot show you Tesla Motors chart since it is confidential, but a strong buy rating given in Tesla Motors with a very specific upside target, and the stock, while great investors in the world like Jim Cramer on CNBC, they were bearish these stocks at the IPO, recommending to sell. It was precisely there that in fact you should have been buying the stock. I upgraded this to strong buy only in late 2012. I didn't follow this stock since IPO, and I recommended as the last opportunity in fact to buy the stock in 2013 to be this gap to the upside, the $42 region. So today Tesla Motors is a stock trading at $110, and obviously the great investors in the world now, they tell you to buy this stock. Obviously the stock was a buy before. You are not again going to buy Tesla Motors at $110. That is obviously ridiculous. I mean, you had to buy the stock before. I think that is logical. Although what I say, it appears and it is logical. What most people they do is precisely the opposite. They and that is one of the major reasons individuals like these Jim Cramer and David Highorn and so on, they precisely recommend to buy these stocks. They didn't like it at $20, but then they like it at $110. This is common in Wall Street by all these great investors in the world. I prefer to be, as you might imagine, referenced to or referred to the worst investor in the world, while I have the facts on my side. And not only because of that, also I prefer to have a contrarian view against these individuals. And in fact, I don't have anything else to prove, my friends, because you just have to look at, and I'm not going, just to refer to again Apple. You can refer to all this list of stocks discussed here, and today you saw one more example that is BlackBerry that you may see here at pre-market. It is $11.70. So I was saying that in Apple, and Apple is not an exception, that on the list I'm referring to a list of stocks that not only in the US but also in Russia, stocks like Yandex, or in China, stocks like Sina Corporation, Baidu, and Seoul, and so on. Stocks in Europe, UBS, well, there are many companies, Credit Suisse, just some examples. Obviously stocks, in several countries, even in Spain, like Santander, countries like Portugal, BCP, and so on, great shorts that they were always down for the collapse. Italy, so not only the US, all these countries around the world, including also Brazil, some companies, also some companies in India, companies in Japan, obviously the Japanese market, and that is other terrific call made here, calling the Japanese market the single best market going in 2013. And you saw a huge rally in the Japanese market, the 9,000 strong buy almost to 16,000. That is it was my most bullish target in Japanese market. Obviously making use of stocks like and then obviously you also saw the correction in Japanese market because of profit taking since then. In Japanese market you may see examples of stocks like Nomura. Nomura, that by the way it was one of the most bullish analysts in the world in gold, with unreasonable price targets upsides. That is completely madness. And if you bet and if you follow the advice of these great investment houses and investors of the world, that they are always and every single day on the news, articles, books, magazines, well, you lost your money, and I believe that that is a strong reason for you to have lost your money, is that one should not follow the advice of the herd. So when everyone is on the same side, what you should do in fact is to be on the opposite side. And the case in Apple is just, as I said, is not an exception. There are many more examples. In fact, all of them in the end they do precisely what I've been discussing here. So I was going to refer to Nomura Holdings. Nomura, that is other terrific call. Let's see if we can find Nomura Holdings here, if this is going to load. And this is the strong buy rating given precisely coincident with the Japanese market. The downside was, in my opinion, $3.70. The stock even traded down in January 2012 to well below $3, which is good because one had the possibility to buy well below the downside. This line represents the downside, $3.70, the strong buy, and then the exponential rally in Nomura Holdings, and then obviously a case study, a live trade call calling Nomura Holdings profit taking at $9.26. The stock even traded above that to $9.58 as far as I remember, and then sold off all the way down to $7, and this is coincident with the profit taking, that is the Nikkei going from more or less 15,800 or so all the way down to 12,700. So a very important call in Nomura Holdings, where obviously after my call you saw the huge volumes in on the stock. And I repeat, after my call you saw the most important volumes in the past few years in Nomura Holdings, dumping the stock, and that was profit taking. And this is just an example of one more case study where you have live trade calls, and you can confirm this because I can show you all these calls where all the inflection points, where to buy, where to sell, and this obviously on a mid-term or long-term or short-term basis. I don't like day trading. I don't scalp stocks. I'm against those principles. I don't trade the penny stocks. Obviously also other case study that is famous all over the world, MF Global. And when they say that is famous, I'm the only person in fact in the world that call it the total meltdown, with a price target in MF Global 0. So selling short the stock and remaining short all the way down to 0. And today, you know, all of you know the story about MF Global. I think that obviously was a great call and unique in the world, and obviously from the worst investor and the worst trader in the world. But you don't see that for some reason. A guy like Jim Cramer, one of the best investors in the world, or David Hayhorns, or Jim Rogers, and so on, to call, you all remember the call made by individuals, Jim Cramer, on TV, informing millions of people on the TV how Bear Stearns was a great buy, at $58 before the stock collapsed all the way down to $10 in a matter of weeks. I think this explains why these individuals that they are on the magazines, on articles, that they are famous, they have problems where, in fact, believe me, in fact, investors do call them, they believe on them, and I think that is precisely what I've been talking about. I'm very proud to be, the worst trader in the world, the worst investor in the world, because I prefer to have these individuals on TV, on left-hand side, CNN, right-hand side, Fox News, and to have them there trying to convince, and because I don't have that, that is not my attitude or my skills, trying to convince these individuals now that, like I was saying before, Tesla Motors is a great buy at 110, but at 20 it was not. And Tesla Motors is just an example, because I could refer to other case, call it here the let's see, I could go through this entire list and to tell you all about, the first dollar, the short at $300, or the recent case, let's see, in these F5 networks, a great short, 135, all the way down to the current price. So this is the case. Let's see if we have here, in fact, the chart in F5 networks. You see, this is a strong sell, and there is also a case study about this, calling this one of the best shorts in the market at 135, strong sell. Precisely when individuals like Jim Cramer, the great investors in the world, were calling this a great buy, and Wall Street, no one had sell ratings or strong sell ratings in F5 networks, and I believe that I was in fact the only one. And calling this a total meltdown to current prices. So this week, F5 networks traded down to $68 an hour. So congratulations if you have been here. I think this is just one more example of a terrific investment on the short side. And again, I repeat, betting always on the collapse, and only after the collapse investing on stocks, and never chasing the momentum created by Wall Street. And also I think that is important, since this is an introduction, to refer to, I can give some examples of IPOs followed here since day one. Probably the most famous, Facebook, since everyone knows this company. And again, you had the great investors in the world calling Facebook a strong buy at IPO prices, with targets to $70 like Jim Cramer and many others. And in fact, Facebook, it was a strong sell since 38. I explained all the steps I uploaded in until today. Be a buy or a great buy long term and not even short term. I think that is also important, because you had to bet on the collapse, even in Facebook. Obviously, stocks or companies like Zynga, they were by far better shorts, or even Groupon, or Yoikos, the previous years, or Dang. Those are also stocks that they have been discussed here. So in all these stocks where there is no trading history whatsoever, there is no history whatsoever because it is an IPO. There is Wall Street is not following these stocks. They normally start to follow up them long time after the IPO. In, for example, in stocks like Dang or Yoico, I'm going to give the example of Dang if I find it here. And I don't update charts as other people or other investors all the time, every single day or every single week. Is precisely the opposite. Let's see if we can see Dang that thing, that is the short-term chart. In fact, it's showing you the short-term chart, but let's see if we have the long since IPO, because it is more important for you to visualize the history here in Deng Deng. And this is the long-term chart in Deng Deng. So a short position in Deng Deng, betting on the collapse in Deng Deng with a very specific price target already given, in fact, 2 years ago in 2011. We then left the stock, and that price target was $5. And then the stock rallied 100%. It crashed again all the way down to a price even below the $5. And recently in 2013 the stock again at 100% again, $4 to $8.13. So you know, this history in Deng Deng, and this is, I repeat, one more case or example where you had also Yoico, you had Facebook, the most famous. All these pivots, they were called here, all these inflection and the major action of trading or investing, in this particular case in Deng Deng on the short side. So I had very specific price targets or upside in Deng Deng since day one, and I repeat, since day one, since IPO I gave price an upside on the stock, and not a downside, because at that point I didn't know, or I didn't have the perception or the belief or the idea that Deng Deng could melt all the way down to $5. Just for your understanding, it was a process, okay? It was a process where, during the process, I believed that then, for example, reiterating in 2011, and this is just for you to understand step by step, short at $12, the stock then with the ultimate target bottom at $5, okay? So I think this is important, because when I recommend to sell short Deng Deng, it was not for a price target $5, because I didn't have that price target at $5 there. In some cases, for example, like Netflix, when I recommended to buy Netflix in 2012, late 2012, October, 50 to 86, I had an upside 163 in Netflix, and the stock traded well above that upside. So this is to give an example that there is a process, and obviously the most important is the process, where then we follow up every day or week and month, obviously then with earnings announcements and the overall market, the comments about the ETFs and so on. So I think this is sufficient to give you an idea what is the live channel, how I use it to share communication or information, sorry, with individuals, institutions. It can also be used, although you are seeing my the camera, I could also be, you could also be online. I can have several people in video conference online. There are up to 100 people that can be logged in, not in video conference, but at least logged in. The sessions there can be private, so I think that is important. You can participate. I can also allow you to, I can give you the right for you to be the presenter, so what I'm doing here, that is sharing my screen, you can do it on your end. I can have a whiteboard and explain here certain things, so you know, collaborating with you. If you have questions, you can use your PC. I can do this using iPhone or Android or an iPad. I often do. Is one of the tools that in the market that allows you to, when anywhere you can attend a meeting, you can even be the host using one of those tools. I'm not promoting that tool, I'm just referring that that is one of the reasons we use this tool, the very high quality of video and also voice, and it works. You see that it is working on 4G, and it is working, I believe, quite well. It had some probably failures during the presentation, but it is extremely reliable. And again, I repeat, without any or following any script. So today I'm going back to this don't forget, for example, case study, great case studies like calling Amgen a great buy, 48 to 50 to strong buy, all the way up to $114 is an amazing case study, unique in the world. So you find all these in the live channel, and trading all these that bullshit. And obviously I don't follow the advice of anyone, and I don't recommend also anyone to follow even my advice. I'm just an individual that is willing to share his own opinion with people. If they want to listen, they listen. If they don't want to listen, they don't listen. I'm happy with that anyway. So BlackBerry, congratulations, I think is an extraordinary call. Obviously, again, I repeat, 100% accuracy, calling this a sell with a very limited upside, $18 and a half, while many investors and Wall Street analysts, they remained bullish the stock with upside targets in the 22 region. Okay, so if you believe that BlackBerry is in fact a strong buy, you should be buying the stock obviously always after the collapse, but after the collapse you had to bet on the short side. Okay, so you made the most on the short side, and only then you buy the stock after the stock collapses, and never before. That is not, you are not ever going to buy the stock, you know, like Wall Street in the past few years was recommending to buy or to invest in BlackBerry, former Research in Motion. That the major direction of investment on long-term basis, it has been always the long side, all the way down to $9 that I informed you about in 2012. And bear in mind that during the collapse in Research in Motion, analysts like Credit Suisse and many others, they were calling strong buy ratings, even at $40, even at $50, even at $60. They remained bullish the stock with upside targets in very high in Research in Motion, that then collapsed all the way down to single digits and recently changed its name to BlackBerry. So this, what the stock is doing is actually, you see that stock real time, and I'm proud to do this real time, and I can confirm to you because there is a presentation. This ellipse was already there. This ellipse represents what I was in fact looking for in BlackBerry. So the stock is $11, $11, it already entered the ellipse. That is, you see the target range for where I would be eventually interested to buy BlackBerry, but never at $15 or even at $14 an hour. That was the price before the earnings announcement. Okay, so these very important things, since people, what normally they do is that they don't have any idea what investment or trading is. So all these pivots, I repeat, the inflection points, the bottom in BlackBerry, the call for the extraordinary rally 300% to $18, then recommending in fact to sell the stock. The stock was in fact also, there is a live case study in December, the stock was already a sell there, and betting on the short. So creating all these channels, creating all these charts, and by not following any single indicator. This was done live, live with the calls and looking at the tape. So I don't follow any particular indicator, in the sense that I don't rely on any indicator. I don't rely on complex indicators, or that most people they invest time and money on books. Here I'm informing you in advance that I don't rely in any particular indicator. Obviously I use technical analysis as a simple or a mere tool and nothing else. So you don't find in technical analysis, they in books, they are not going, you don't find in books recipe that tells you that BlackBerry is going to collapse all the way down to $11, and you know, at 16 is a potential, here is a very heavy resistance. I created, and there is a confirmation of several case studies where these pivots, they were called in advance. Okay, $16.30, and here you have a triple, basically a triple top within the top, that is this region here when the stock traded above $18. Okay, where Wall Street remained bullish during this process, and only then recently they start to downgrade some analysts BlackBerry. But that has not been the case in Apple, where they, most of them, obviously they remained very high bullish. Even those individuals, the best analysts in the world, like the Brian Whites in the US and Gene Monsters and so on, during an entire crash process, they downgraded, for example, Apple from 1,111 to $900. Okay, so if you had the stock at $600, if you had the stock at $500, if you have the stock at $400, the stock for you is always a buy. Because if you have an upside of $900 in Apple, obviously the stock is always a buy, and it remains a buy even if it goes down more $100, it remains a buy. In fact, a strong buy. For them, it is always a strong buy. So instead of downgrading the stock, as I did, that should have been the case for all of them, because in fact they are paid precisely to be responsible and not to sell ideas. They have been upgrading the stock, they have been raising targets to, in my opinion, what was absurd level, precisely the same situation as in gold, with many investors, the great investors in the world, calling gold to be 5,000 per ounce dollars, up to 46,000, my friends, 46,000. You find Nomura targets, I believe it was like 15,000 in Nomura, in Japan, some analysts. So this is on the internet, you can search, you can look for it, and you can, this is based on facts. Obviously, to be a great contrarian, I always prefer to be called the great or the worst trader or investor in the world as a great contrarian. I rather proud to be seen like that, and always with sunglasses, shirt, shorts, and sport shoes, and a pool on the background to make exercise pre-market, which I believe to be rather important to make exercise and to remain fit and to have sun, instead of be closed in an office doing nothing or trying to convince others that Apple was a strong buy and everyone had to believe in it, because you all remember that in fact there were several individuals calling Apple to be a company of several $1 trillion, not only $1 trillion. There were individuals, companies, reliable companies like Bear Stearns with nice buildings, companies like Lehman Brothers with very nice office, extremely polite, fluent English, inviting you to get in, and then obviously the meltdown is not only in Apple. I mean, as I said, it is not an exception. You saw the same, in fact, in Netflix before the stock was considered then a strong buy, or in stocks or companies like all of you remember Countrywide Financial, one of the great shorts, also upgraded by some investment houses in Wall Street at $34 before a total collapse, and then the company disappeared. You all remember the case study, the story about Mozilla in court. And this is the financial markets. This is financial markets where the most important tool that I use is, and will always be, the tape. This is the most important tool that you can get, is the tape, and I'm expert reading the tape. So what I do is basically this, is to read the tape. Okay, I do this in real time, and I share then my view or my vision with individuals all over the world about what stocks are eventually likely to do, and then informing them about earnings, hedging strategies, ETFs, stocks across different market sectors, tech sector, financials, materials, commodities, and so on. This is just an example. I believe that I've been very explicit and clear about all this, and I do apologize if I took too long, but I think that was there was and there is no script. So this was made live, also using pre-market this BlackBerry, sharing with you all this information, informing how to this tool, the live channel works. That is a web conference tool, and mentioning all these cases because without you having a clear understanding of all, this list of stocks that is here, that is rather important. Without your understanding that there is a very wide list of stocks that I follow, obviously more, probably 70 or more stocks and ETFs, including IPOs, and there is a long history trading many of these stocks, or investing either on short side or long side, with very clear recommendations, upside and downside, position sizing as well. Also providing instructions in terms of how to trade stocks, explaining certain rules that are a part of the methodology. A methodology that was created, I created it more than 15 years ago, and a methodology that has been proven, obviously, then by following my own guidelines and pivots. Without those pivots, the methodology can be used, but it does not have the same impact or return. So thank you very much for attending this presentation, this introduction about my person and the service. Thank you.